An insurance broker sells, solicits, or negotiates insurance for compensation. The three largest insurance brokers in the world, by revenue, are Marsh McLennan, and Willis Group Holdings. Insurance brokerage in the UK. Insurance broker became a regulated term under the Insurance Brokers Act 1977, which was designed to thwart the bogus practices of firms holding themselves as brokers but in fact acting as representative of one or more favoured insurance companies. The term now has no legal definition following the repeal of the 1977 Act. The sale of general insurance was regulated by the Financial Services Authority from January 14, 2005 until March 31, 2013 and by the Financial Conduct Authority since April 1, 2013. Any person or firm authorized by the authority can now call themselves an insurance broker. Insurance brokerage is largely associated with general insurance rather than life insurance, although some brokers continued to provide investment and life insurance brokerage until the onset of more onerous regulation in 2001. This drove a more transparent regime based predominantly on upfront negotiation of a fee for the provision of advice and/or services. This saw the splitting of intermediaries into two groups: general insurance intermediaries, brokers, and independent financial advisors for life insurance, investments and pensions. General insurance brokering is carried out today by many types of authorized organizations including traditional high street brokers and telephone or web-based firms. A Lloyd's broker is a firm of brokers that has been approved by Lloyd's of London, and having met certain minimum standards, is able to place business directly with Lloyd's underwriter. Insurance brokerage in the United States. In the United States, insurance brokers are regulated by the states. Most states require anyone who sells, solicits, or negotiates insurance in that state to obtain an insurance broker license, with certain limited exceptions. This includes a business entity, the business entity's officers or directors, and individual employees. In order to obtain a broker's license, a person typically must take pre-licensing courses and pass an examination. An insurance broker also must submit an application to the state insurance regulator in the state in which the applicant wishes to do business, who will determine whether the insurance broker has met all the state requirements and will typically do a background check to determine whether the applicant is considered trustworthy and competent. A criminal conviction, for example, may result in a state determining that the applicant is untrustworthy or incompetent. Some states also require applicants to submit fingerprints. Once licensed, an insurance broker generally must take continuing education courses when their licenses reach a renewal date. For example, the state of California requires license renewals every 2 years, which is accomplished by completing continuing education courses. Most states have reciprocity agreements whereby brokers from one state can become easily licensed in another state. As a result of the federal Gramm-Leach-Bliley Act, most states have adopted uniform licensing laws, with 47 states being deemed reciprocal by the National Association of Insurance Commissioners. A state may revoke, suspend, or refuse to renew an insurance broker's license if at any time the state determines that the broker has engaged in any activity that makes the broker untrustworthy or incompetent. Because of industry regulation, smaller brokerage firms can easily compete with larger ones, and in most states, all insurance brokers generally are forbidden by law from providing their customers with rebates or inducements. Insurance brokers play a significant role in helping companies and individuals procure property and casualty insurance, life insurance and annuities, and accident and health insurance. For example, research shows that brokers play a significant role in helping small employers find health insurance, particularly in more competitive markets. Average small group commissions range from 2% to 8% of premiums. Brokers provide services beyond procuring insurance, such as providing risk assessments, insurance consulting services, insurance-related regulatory and legislative updates, claims assistance services, assisting with employee enrollment, and helping to resolve benefit issues. However, some states consider the provision of services that are unrelated to the insurance procured through the broker to be an impermissible rebate or inducement. Negligence on the part of insurance brokers can have severe effects upon clients when they discover their insurance coverage is worthless, which in turn illustrates why retaining a competent insurance broker is so important. In one case, Near North Entertainment Insurance Services provided alternative rock band Third Eye Blind with a commercial general liability insurance policy that excluded coverage for the entertainment business. After insurance coverage for a lawsuit was denied because Third Eye Blind was and is, after all, in the entertainment business, the California Court of Appeal ruled in a published opinion that the broker had a duty to advise the band it needed something more than a basic CGL policy. Insurance broker versus agent in the United States, though not an absolute separation. An insurance agent is an insurance company's representative by way of agent principal legal custom. The agent's primary alliance is with the insurance carrier, not the insurance buyer. In contrast, an insurance broker represents the insured, generally has no contractual agreements with insurance carriers, and relies on common or direct methods of perfecting business transactions with insurance carriers. This can have a significant beneficial impact on insurance negotiations obtained through a broker. Of note, the term insurance producer generally encompasses both an insurance agent and an insurance broker. Insurance brokers in Australia. In Australia, all insurance brokers are required under the Financial Services Reform Act 2001 to be licensed by the federal government, a unregistered trademark S Australian Securities and Investments Commission. Reputable and experienced insurance brokers in Australia will generally also hold additional qualifications such as a certificate or diploma in financial services which requires the completion of in-depth studies in a specific area, the most common being general insurance or insurance brokering. Within Australia there are also a number of industry bodies that issue professional accreditations to members that comply with best standards of professional practice and integrity and maintain up-to-date skills and knowledge. The two main accreditations are the NCFCIP and NIBA-QPIB qualifications. Dealing with an insurance broker as opposed to directly with an insurer is something many customers choose to do in Australia for reasons including, the ease of having the shopping around done for them. Having the opportunity for premium funding which allows for larger insurance policies to be paid in installments rather than all at once. Dealing with one broker for all policies from the car insurance to professional indemnity insurance rather than dealing directly with several insurers. And, the ease of having claims managed by the broker who deals directly with the insurer on the client's behalf. See also, List of Acts of Parliament of the United Kingdom Parliament, 1960 to 1979, Financial Advisor, Loss Control Consultant, References. External links. Insurance Agents Directory of India, British Insurance Brokers Association, Financial Services Authority, ASIC, General Insurance Broker.